morning. I've got some questions about uncertainty and contingencies. To begin with for Dr. Carney, and then if others could contribute, that would be great. So, Dr. Carney, at this committee hearing in November, for the November inflation report, you acknowledged that the chances of no deal were uncomfortably high rather than an unlikely tail scenario. And then at your February press conference, you said it was not the central scenario. Can you be more precise than that and just explain what you're getting at?
Yeah, so my colleagues may want to jump in, but the approach of the committee since the referendum has been to condition our forecast on an average of potential Brexit outcomes and assume that there's a smooth transition to that average. And we're not more precise than that, but it's, you can think of the averages between a WTO scenario and something that still is Brexit, but approximating elements of EEA, if I can just put it that way. So somewhere in between is the average, and there's a smooth transition to that. So nowhere in that is a no deal, no transition, disruptive scenario. And so when you see the fan charts around our forecast, that's sort of normal economic uncertainty in any forecast. It doesn't include a disruptive scenario. Now, for the purposes of financial stability, as you know, in other testimonies, we've talked about this. We look at a disruptive no-deal scenario to help prepare the financial system for that, not a point forecast of that. The committee debated this in the run-up to the February report, and I have to say that, full disclosure, we have been, for the last several forecasts, expecting, well, at the next forecast, we'll have a better idea what kind of deal we're going to have, and then we'll have to make the, and that hasn't been the case, so we
wait with bated breath
we and everyone
12
else,
o'clock statement today, maybe. Okay. Maybe the Prime Minister will say something different.
But we debated this and took the view that it's still, when we were putting our forecast together, it was still more likely than not that some sort of agreement was going to be struck and there would be some sort of transition to that. Obviously, the confidence bands around that that's become more uncertain. The way maybe I'll finish and hand back. The way we've dealt with higher uncertainty in this forecast, and this is an important point, is that we have maintained, uncertainty's gone up, and we, instead of just assuming that after March 29th, all of a sudden everyone's certain about the future and they get on with it, we maintain that high level of uncertainty in our forecast for at least a year and then tapered it off from there. Now, there's nothing, we obviously don't know anything specific about the prospect for negotiations, and we're not outlining particular outcomes, but it seemed reasonable to incorporate a greater degree of uncertainty in the forecast. And we have provided in the forecast a sensitivity which you may want to come on to.
Sorry, I just wanted to clarify. Does that presume, the forecast presume an extended, you discussed extension of Article 50. Is there an implicit expectation?
No. There's not. I mean, to be absolutely clear, though, whether one calls it an extension of Article 50 or a transition period or an implementation period or a banana, what we're assuming is that we don't jump from the current membership of the European Union to some new world overnight. And we certainly don't assume that we jump from the current membership to a WTO world overnight. That's the extent to which we have tried to.
An extension an extension and implementation period are two different things.
They are different. They are different things.
I mean, they might still both be uncertainty, but
so there's a big difference between an extension of Article 50, even a long extension of Article 50,
Well, you could still be negotiating.
And an agreement, yes,
Yeah.
with a transition to a known end state. I guess to read into the record what I think is obvious, that, at least in my view, that long-held view, that wherever we're headed, it would serve the economy well to have a transition period to that new world. So that people knew soon where they're headed, businesses could reorganize their affairs and get ready for this new world, and government could finish its various tasks in terms
just
of
a quick
logistics.
one on that, and
bring
then I'll
David,
come on to bring in Sir David. So if it is desirable to have a transition agreement, and given we're so close to a no-deal scenario, and you've had a discussion about the prospect of further extension, for further negotiation, and so on, isn't it sensible to have some kind of extension to be able to have the transition deal rather than no deal?
I mean, I'd keep it at two things. One, just for the record, I don't think I said this, but we didn't have a precise discussion about in fact, we didn't have a discussion about extension or not of Article 50. What we had a discussion about is what's most likely at the time we were making the forecast. Is it more likely that we're going to have no deal, no transition, or is it still more likely we will have some form of deal and some form of transition to it? And the judgment of the committee, which I absolutely agreed with, was the latter was more likely. Therefore, we kept the same conditioning assumption. But given the nature of negotiations to that point, and to some extent, given the nature of the political declaration that has been agreed, which has a fairly wide range of potential outcomes associated with it. The Prime Minister has specified one, but that it seems a reasonable possibility at the time we were making the forecast that uncertainty about the end state would persist beyond the Brexit date.
How far beyond?
Well, I almost throw it back to you collectively because it's in your hands, and I'm not trying to dodge the question because that really is the issue. Is defining. But if I could just reinforce, given everything that we have seen in terms of preparedness of businesses. And it's not because...
I'll come on to that.
In terms of preparedness of businesses, preparedness of the country.
And
I wouldn't say this doesn't hold actually for the financial sector, which is pretty much ready. But for the rest of the economy, on taken as a whole, is not their fault, but they're not. That it is in the interest, whatever endpoint is decided ultimately by Parliament, in agreement with the EU 27, whatever endpoint is decided, is that there is a transition to that endpoint.
But we're not. Time's running out, and we're not anywhere near there unless something changes today or in the next couple of weeks. So Ramson, so Dave, do you want to come in?
I was just going to bring it back to the way we've approached this reflects what we're seeing in terms of the impact on the economy. We've seen this kind of intensifying uncertainty, multidimensional, about uncertainty about the end state, about whether there'll be a deal or no deal and any transition. Business investment in the year to Q4 last year fell 3.7%. That's incredibly unusual at a time when the economy's been growing. So out of line with UK historic experience, out of line with what's been happening in our main economic partners. And so in a sense what we have done, because we're seeing that uncertainty impacting on the economy, our assumption for the forecast is that will continue, that some of that will be locked in for at least another year. Right. And that is what's framing why we have weaker growth than we had in November in the short term. Still positive growth, but weaker growth. Yeah. And then as the uncertainty starts to subside, as the fog starts to clear, and as the world economy stabilises, then we see growth picking up. And that's all conditional on this underlying assumption that there will be a transition to a range of Brexit outcomes. But What we
if
can
there is-
do is link. Sorry.
Sorry, if there isn't, you're saying 1 year with those sorts of scenarios, but if there isn't a transition, how long could we expect uncertainty to persist?
I mean, I would then play it back to, as the governor did, in a sense, it depends on
I was hoping for a departure.
It depends on the circumstances that we are in.
That's
What we're
helpful.
seeing in real time, our lived experience is how an economy deals with multi-dimensional uncertainty, and we would keep having to observe it if it continued.
Professor Haskell, do you want to quickly come back to that? Because I've got a couple more questions.
Can I just be very, very quick, if I may? I mean, just to amplify, Dave's point, in a sense, what we think as a committee is hopefully rather important, but also what's possibly even more important is how businesses themselves see all of this and the probabilities of a no deal. And again, as someone relatively new to the bank, I've been very impressed by the way the bank has used its network of agents in quite an innovative way to try to get at what businesses are actually doing and the preparations that they're making.
Sean's got a couple of questions, then we're going to come to what the business is.
I've got one more,
Yeah.
which is, and I know others will come in on this. So on the agent survey reports, half of them have said they're not ready. You've already touched on that. For no deal, no transition. And even though 3/4 of those firms have contingency plans, there are also issues about a number of them, many of them starting to stockpile. In the absence of my colleague John Mann not being here, are there enough warehouses to stockpile goods to be able to cope with a no deal, no transition scenario?
No, there aren't.
There aren't.
No, I mean, that is one of the issues, is shortage of warehouse space. I think what we're seeing, what we're picking up is exactly what you said. We're picking up stockpiling. Some other surveys are picking up stockpiling. You're not seeing, to be clear, it's not showing up in the hard data yet. But there's a limit. There's a limit not just in terms of warehousing capacity, but there's also a limit in terms of how much you can stockpile inputs in order to keep production going, and certainly in lean manufacturing, auto sector, aerospace, etc. It's not much of a.
So we're looking at chaos basically in that scenario.
I won't use that term. A no deal, no transition scenario would be an economic shock. It's difficult to be precise about the orders of magnitude of that. We have, as a committee, for different reasons, so it's not a formal forecast, it's only a scenario, but for the purposes of the request of the TSE, we did provide a forecast, which I would characterize as, we provide a forecast of a smooth transition to a WTO scenario, which does involve a period of negative growth. I would draw attention to, on page 17 of the report, you've obviously read it already, but the agent surveys of what companies expect in that scenario, which is a sharp fall in output, a sharp fall in employment, sharp fall in exports, not surprisingly, and a sharp increase in prices.
Just a quote from one press report. The risk of border gridlock caused by no-deal Brexit has led British manufacturers to ramp up their stockpiling efforts to the highest levels on record for a major advanced economy. Is this, in your view, there isn't really anything comparable, is there?
Well, I haven't seen that report. I'm slightly skeptical of that, given the levels of inventory stocks over decades has been coming down. So it depends where your history starts. We're picking it up. We think there is increased stockpiling, but for the reasons you cited in terms of warehouse space and also the overall effectiveness of the strategy. If you're truly a lean manufacturer, you're getting a few extra days, but if your perspective is that the logistical disruptions, border and other disruptions, may persist for weeks or even months, then it's cold comfort.
Okay, thank you.